Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Brent S., Cindy W., Ryan S., and Mike P. Jordan Trimble has returned to the show today. Jordan is President, CEO, and Director of Skyharbour Resources, an Athabasca Basin, Canada-focused uranium explorer with multiple projects, including the Cornerstone Moore Uranium Project, along with some other properties and joint ventures. Skyharbour is listed on the Toronto Venture Exchange under the symbol SYH, and also on the US OTC markets under the symbol SYHBF. Jordan, welcome back to the show, and how are things in the office?
Yeah, things are good. I'm happy to be back. It's been almost exactly a year, so we have lots to catch up on. It's been nothing short of an interesting and volatile year. Lots has obviously happened in our market, uranium market, so happy to be back and looking forward to the interview.
Yeah, it's good to have you back. And Jordan, let's start out here maybe with the current macro picture for uranium. You know, given the most recent events only, as you and I have beat to death the prior events and the bigger theme, but maybe just the recent events. But what's your position here with the current supply deficit and the recent events that have happened over the last, let's call it a year? And how long do you really see this annual deficit continuing to last?
Yeah, it's a great question. You and I have talked extensively about the supply-demand fundamentals, and look, the supply-demand fundamentals for this commodity have been very compelling from a contrarian investor standpoint for years. We saw a market that in 2014, 2015, 2016 was under siege. Obviously, the Fukushima disaster led to a major sell-off. You had a lot of supply coming out of certain parts of the world, including Kazakhstan, and so you had a market that, from an investment standpoint, was not a place you really wanted to be, and we took that as a signal to get in there and start acquiring projects back in 2013 and 2014, and that's when I started running the company. And we're now, we're at, I think, an important inflection point here. I as I said a year ago, I truly believe that 2016, the end of 2016, was the bottom of the market when we saw the uranium price drop below $18 a pound, one of the lowest it's ever traded at in inflation-adjusted terms. We've seen a steady grind higher, although it's been volatile. There's been good and bad days, as we know, but look, the supply-demand fundamentals in particular in the last year have just gotten more and more compelling. So we look at back in 2016 when the prices were in the gutter near the bottom, we had a annual primary mine supply of over 116 million pounds, and that was in the backdrop of about 180 to 190 million pounds of annual demand. Well, we've seen that steadily decline, and we've seen a number of pretty major production cuts initially from the low price environment that we were in, at $25, $30 a pound, where we're at currently. There's not much production out there that makes money. You need a much higher uranium price to bring that production back online, and a much higher price to incentivize new mine builds. And then just in the last 12 months, and again since our last interview almost exactly a year ago, right before the pandemic really got serious here in North America, we've seen an exacerbated supply situation and supply disruption globally. At one point back in April, we saw almost 50% of global primary mine supply offline with the shutdown of Cigar Lake, and that's, as you're well aware, currently shut down again because of COVID, and then supply disruptions in the largest producing region in Kazakhstan, and a number of other mines globally that had an intermittent shutdown due to the pandemic. And so looking at the demand picture here, and I think this is a highlight point too, the demand side has been relatively stable. That's something that I know the industry in general, certainly we were looking at with fingers crossed that it wouldn't get hit too hard, given everything that's transpired in the last year. And we've seen a relatively negligible impact on the demand side, which is good to see. Nuclear reactors aren't the easiest source of electricity generation to simply turn on and off. So you would see other sources of electricity generation turned off, like renewables, that are easier if there's less electricity demand, generally speaking, because of a slower economy. Yeah, we've seen this major supply deficit that's formed to the tune of what appears to be in 2020 50 to 60 million pound primary mine supply deficit. So that's eating into secondary supplies, that's eating into inventories and stockpiles, but that can only last so long. And I guess that's the tougher question to answer is how long can that last? And time will tell. My opinion on it is that I think we're at the end of the line here with utilities drawing down inventory. I think you're seeing that. You can see that to a certain extent on the spot market too, with less mobile inventory out there, mobile supply out there coming into the market. You're already seeing that market tighten up. You're seeing that as well with producers like Cameco and now more recently Kazatomprom having to purchase material in the spot market because they've had to shut down production. So to answer the question, how much longer can this last with this supply deficit? I mean, look, the supply deficit, I think, will last a while, could last a while, but when is that going to have a major impact on the price of the commodity? Time will tell, but I have the feeling that it'll happen sooner than later.
Lots of stuff that's happened, and they've got a lot of pounds to buy, and they haven't started yet this year. We'll see what happens. We know what happened last year as far as the little bit of pounds that were tried to be secured in the spot market and what that did to the price. We saw the results of that. And of course, that immediately pulled back. And the thought process, I think, was, let's get Cigar back online. Let's get some of the pounds that we know we can get from our own mine. And then, of course, COVID had other ideas. And quite frankly, aside from COVID, I think that also there's some economic considerations for saying, well, you know what, let's just shut it back down, even though they wouldn't say that. But that's a great setup. And to my question about the deficit, I think that's a question of incentive price plus lead time. So it's not unreasonable to see that based on the existing global capacities to restart, add incentive price plus, and then add your lead time, this can go on for many years. And,
absolutely. Absolutely.
And I want to, couple that with my next question here. But what's your view on the thought process, Jordan, that this recovery will be an incumbent recovery, meaning that the existing global production centers at incentive price can satisfy demand for the foreseeable future? Or are you of the view that new capacity must be built?
I'm the latter. I'm of the view that new capacity, new production is going to have to come online. I mean, again, with COVID, you had primary mine supply just above 120 million pounds with annual demand relatively sticky and growing, right? Growing in particular in certain places like China and India and other parts of the developing world. 50 to 60 million pound primary mine supply deficit. Even with the restart at Cigar, even with ramp up in Kazakhstan, you just saw their numbers. They came out with, I think it was yesterday, a 19% decrease in 2020 relative to 2019, and issues with their well field development, and that can have a lingering impact, and we can get into that later. But even with the ramp up or the turning back on of these mines, we're still in a primary mine supply deficit. We're even if you look at 2016, prior to some pretty significant production curtailment, including MacArthur, you had a primary mine supply deficit. So it really then boils down to how much inventory is out there, which, as you and I have discussed, is never an easy number to get or to lock in on. But we are seeing, as I pointed out in the spot market, we're seeing a strain there. We're going to, I think, continue to see that, especially as we see producers continue to have to buy material. And I want to just, highlight another point too, but, the longer that we see this major supply deficit last, it's not just about how much inventory is being drawn down or, how much stockpile they're drawing down, but it's going to eventually force the hand of the utility companies, right? They haven't been contracting. There's been a lot of material transacted in the spot market in the last few years, and relative to the long-term and contract market. And as you and I both know, that's the big catalyst here. That's the major driver going forward for this metal and for the movement in the price, is to have a resumption of normal contracting with the utilities. And we already know that they are low on inventories, certainly relative to where they have been historically. And when they do start contracting and do start procuring and having to meet their requirements later on in this decade and in the 2030s, not only are they going to be buying, but they're going to have to restock as well, given that they've fallen below their typical historical thresholds, right? And so I think it's this confluence of factors, which again we've talked about at length for a number of years. What's interesting is it appears to now be it's going to be a black swan event that's going to lead us out of this. And lead us out of it, meaning, people are now, investors in particular, are now starting to pay attention to the sector. It was a black swan event that led us into this back at Fukushima. And no one would have predicted a pandemic like we've seen. No one would have predicted the kind of supply disruption that exacerbated the existing supply constraints. And it goes to show, and this is pretty typical for this metal and this commodity, the risks to the supply side far exceed the risks to the demand side. And that's a function of the production globally being concentrated both geographically and geologically. When you get, just a couple of mines, take Cigar and MacArthur, for example, I mean, these are major production centers of uranium, and one of them goes offline. That's 10 to 12% of global primary mine supply that's offline. So that, even for a few months, like we're seeing right now with Cigar Lake, Cigar Lake will restart at some point here, but for each passing month, that's a significant amount of pounds taken out of the market. So it's the supply side response has driven the initial part of this recovery, but the catalyst to bring, I think, investor interest and positive sentiment for investors in uranium was unfortunately a black swan event that really crippled the supply side. And now what we're seeing, which is interesting, just in the last few months, and I think this is what you can attribute some of the share price gains to, is the potential for growing demand, a demand side that's garnering attention because of the ESG movement and because of the momentum globally right now and the push globally right now for carbon neutrality and clean energy. And so we're at an interesting point. I revert back to one simple fact: the metal's still trading $30 a pound, historically a low price, well below the average all-in cost of production, and certainly well below the price needed to incentivize any new meaningful production to come online.
Lots of stuff to talk about there, and my comments would just be that for supply balance to come back into the market, a lot of things have already gone right for us. And a matter of fact, a substantial amount of things have already gone right when that occurs. I think also that people kind of forget about, some of these mines like MacArthur's, this is a classic. I mean, this thing, peak life has already passed.
Mm-hmm.
There's not a lot of time left. It's been somewhat high graded. Cigar's kind of in the same boat, not near as bad as MacArthur, but these don't have a lot of life left in terms of when you talk mine years, in comparison to longer life assets and newer assets that have been brought on. But then also, just with the removal of Ranger, Cominac coming offline, and, this assumption that BHP was going to expand Olympic Dam, that's another one that I do think that they will expand that when the copper price is much higher. And of course, the sentiment around copper is different. I think that will eventually happen, but it's those types of things that you just won't see these types of projects come on anytime soon. And meanwhile, we're still depleting and closing other projects. And then you have to fight through the permitting process to get these other projects coming on that have any really notable significance. As far as the utilities goes, I really think that McDonald's has a better inventory than these utilities. So it's going to be interesting. And when they all come, we'll typically be in a frenzy fashion. And I think we'll see that same type of activity happen again.
Yeah, and Olympic Dam BHP. I mean, look, that's I think something that kind of got glossed over by the investing community. That's been a pretty significant source of byproduct supply of uranium for a number of years. And as you pointed out, some of these other mines that the larger mines in the basin, these aren't 20 plus year mines anymore, right? So they have a limited shelf life, and you really don't have a lot of new, meaningful, substantial production that can come online in a short period of time. There's some excellent development projects out there, but it's going to take time to get permitted. It's going to take time to be in a market environment that's conducive to financing the development of these mines. Now that can change quickly, and we hope it does change quickly. But we're certainly, I would say, right now at the early innings, early days of this recovery, and I think impending bull market. We're not there quite yet. So yeah, look, it'll be interesting, and a segue on that to the utility companies. As we know, they've been dormant more or less, and they've been playing hardball, if you will, with the mining companies over the last several years. They're not contracting right now. They're trying to put pressure on the pricing of these contracts, and they want to obviously get best price that they can possibly get. But this has happened in the past, and in some cases it's you get this herd mentality where you push it to kick the can down the road long enough and too far. Eventually they have to come back to the market. They have to start contracting again. There's only so much material that they can buy in the spot market and other and draw down inventories. And as we've seen in previous cycles, typically when one or two or three of them come back, you do see this rush, and that's what creates these major price distortions and very rapid moves higher, as we've seen in the past. And as I see the clock continue to tick, and as we see in particular the last few years where you can see this market rebalancing taking place, I just think they're getting closer and closer to that point where they're going to have really no choice, and they're also going to have to be, to a certain extent, price takers, right? We know that the mining companies are not selling their material in long-term contracts or any significant amount in long-term contracts at less than $40 a pound, and so I look, Cameco's shown perfectly here that you actually don't have to produce a whole lot, and you can have a pretty good looking chart, right? So that's something to keep in mind, where obviously there's a lot of discussions being had, and I'd like to think they're getting closer, but at the end of the day, I think the mining companies are the ones that prevail. They will, as they've shown in the last several years, they will simply curtail production and wait for this rebalancing to take place, wait for this price discovery to happen, and then they'll come back to the table and they'll say, look, here's the contract and here's the price.
Yeah, and meanwhile, they're probably accumulating shares of the equities out there. So there you go.
Exactly.
No, look, as the price rises, there'll be more incentive to push some of these projects. It's like, Jabiluka, Rio, that project, when the price gets high enough, they'll make a push again to try to get that project to move forward in spite of the environmental, social problems.
Mm-hmm.
But no, I think you're absolutely right. I think the utilities will come hat in hand, take a number and get in line, essentially. That's what has happened in the past. And I think also, I don't think their behavior will change in that form. I think that there will be a restocking period, and the restocking just-in-time inventory type thought process versus just in case. And as we learned with COVID, a lot of people and a lot of companies thought, well, maybe we should reconsider how our supply chain is structured. Maybe we should start to move back towards a little bit of warehousing, this thought process that, maybe we should keep a little more beans and rice in the pantry type of setup. I think that people have been reminded that supply chains are quite sensitive, and COVID reminded a lot of people of that. If you get a little bit lazy, these types of things are a fantastic reminder. Well, look, let's talk Skyharbour here. Maybe just give us just a high level update here just on capital structure, the current shareholder ownership, and also the cash on hand at this point.
Yeah, absolutely. So just from a very high level for the listeners that aren't familiar with the story, we are a high-grade uranium exploration company. Our project base is in the Athabasca Basin in northern Saskatchewan. So, our business is to go out and make new discoveries, delineate resources, and, our ultimate goal is to sell the company and hopefully in a much better uranium market. We do act as a prospect generator as well, which we can talk a little bit more about later in the interview. So we've got multiple irons in the fire with several partner companies, one of which is an industry leader and strategic partner of ours, Orano, which is France's largest nuclear fuel cycle and uranium mining company. We have a partnership with them at one of our projects, and then, as you're well aware, our other strategic partner is Denison Mines. They're one of our largest shareholders, and the president and CEO, Dave Cates, who you've had on the show before, is on our board. So very close working relationship between us and Denison. On the cap structure, it's pretty straightforward. There's about 99 million shares issued and outstanding. We trade around a 25, $26 million Canadian market cap. So there's, I think, a very strong value proposition, which is, I know, something I would have probably highlighted a year ago. We've traded up a little bit since then, but it's still relatively low, I'd say, and certainly attractive relative to the peer group. We've got about just over 2.5 million in the treasury, so we're well funded. We raised money late last year. There was a fund that has come in as the lead order on the last few financings, so we're seeing more of a institutional interest in the company, and in particular over the last few years. There's outside of that fund, there's a few others that are large shareholders. OTP Bank, which is the largest bank in Hungary, Sachem Cove, L2, KCR Fund, and several others. And so these are all relatively new institutional investors. And what's exciting too is we're now starting to see, and this is really like literally in the last 6 or 7 months, at least for us, we're starting to see more generalist interest in the company, and that's something we really haven't seen for the last several years, and I think that's going to be a big catalyst going forward. As you see more generalist interest in this space, and there's a number of reasons why we're seeing more generalist interest, but as you see more generalist interest come into the space, that's where you get this potential for the melt upwards, as we've seen with previous cycles. And I get back to one simple fact, that the combined market capitalizations of all uranium mining companies publicly traded is still less than 20 billion. We have a sector that's gone from 2006, 2007, over 500 publicly listed companies to less than 40 active ones, and a major contraction in the space. And keep in mind that nuclear power accounts for 10% of the global electricity grid. So the companies providing the fuel for this vital source of the only source of baseload clean CO2 free, emissions free electricity. These companies combine for relatively small market cap. And so as you see investor interest pick up, you've heard people talk about this before, but this is what sets the stage for a very quick move higher. And importantly for us, you see capital flow down into the smaller cap names much quicker than you would if there were lots of other mining companies or ETFs, or if you could buy the physical commodity. You obviously can't do that for uranium. So we're well positioned. We're well financed for our upcoming exploration and development plans. So the $2.5 million that we have, I will note, we have about another $2 million on top of that. That's going to be coming in from option payments. That's in cash and stock issuance over the next several months. We in December announced a definitive agreement with a new partner company at our North Falcon Point project, a Australian company called Skyharbour Resources, and just signed them up. Looking forward to working with them. They're run by a very capable team out of Perth. George Bach, who's running the company, is a reputable mining executive from Perth who's built a number of mining companies previously. He's got some good past experience in the uranium sector as well. So they're earning up to 80% of that project, and in order to complete that earn-in over the next 3 years, it's about a $5.5 million project consideration in stock, in cash, and the bulk of it in exploration expenditures.
Appreciate the overview on that and the updates. I think the JV model, for you guys letting some of those other projects come out that maybe aren't as attractive to you guys, to be able to take some cash from those and to get other equivalents supportive of shareholders as well. And as far as the cash use this year, Jordan, I suspect the bulk of that cash will go away with your planned operations this year. But can you just speak to where you plan on deploying that cash in 2021? And then let me couple that with, will you raise capital in 2021 at current prices, or would you raise capital if the share price goes higher during the year?
So the current financial position we're in, we expect that to cover us right through this year. The budget that we have on our project base is primarily focused at our flagship project, Moore Lake, which again we can talk more about, but that's really our crown jewel. That's the focus. That's part of the reason we are optioning or joint venturing out the other projects is this is the most advanced of the lot that we have, and it certainly has the best discovery potential. There is a small high grade resource there, and we're expanding that. We're trying to make additional discoveries. The budget for 2021 at that project, we have an upcoming drill program that'll be about $750,000 to $900,000. That'll get us between 2,500 to 3,000 meters of drilling. We'll likely carry out 2 programs of that size this year. We're just going through the final plans and budgeting for that, but we're obviously well covered for both of those. As I pointed out, we have cash and stock payments coming in from option partners to fortify the treasury. Part of being a prospect generator is the other companies that are earning in on these projects. They're the ones that have to fund all of the exploration. So we're not on the hook for the exploration activities and expenses at those other projects until they've completed the earn-in. And just on a last note, as far as potential financing needs going forward, look, if we raise more money, we want it to be at a much higher price. We feel that especially in the context of the market and what we've seen over the last particular few months, even I think we're in for much better days. I think there's a trend that's well in place now, and I see that continuing. I think it's still the early days, and we have some exciting work and programs and upcoming catalysts, company-specific catalysts at our flagship project, Moore Lake, with the drilling, but also partner-funded programs at our other projects. So as I said, I don't foresee us we're certainly not having to raise money. What we are looking to do, and just in December with this recent announcement with Valor, this showcases our ability to do this, is to execute on the prospect generator model and strategy and bring in other partner companies. We have a number of other 100% owned projects that we are in active negotiations with potential partners on, and those deals can bring in additional capital, cash, stock, and also ensure that the project is funded with the other company, the partner company, coming in to fund it. So we would much rather raise capital through that means than have to continue to go to the market. So we're, bottom line, we're in good financial shape. It certainly helped a lot having, this prospect generator component of the business. We will continue to execute on that, and then, we're well funded for the drilling and the exploration plans we have at our flagship project.
And Jordan, just wrapping up on capital structure here, what average price do you own your shares in the company at this point? Have you made any on-market purchases recently, and will you be participating in future capital raises?
Yeah, great question. So you can see almost on a daily basis recently, and at certain periods when I'm not in a blackout, I typically buy almost on a daily basis. Been continuing to add to my position over the last couple of years in the open market. I've participated in pretty much every financing that we've done. My average cost, I would say now, would be probably around 29 cents Canadian. I still see there being a very, very strong value proposition. I said this a year ago. We were trading a little bit lower, but I still believe it very much to this day. You can see that with my recent purchases, and I just see there being a lot of upside from here.
Appreciate you sharing that, Jordan, because I think it's important for management members to write checks from time to time, and as I say, instead of collecting them only. Well, let's come back to more here in a moment. Give us just overall update on the other JV activities and where you are on those other projects.
Yeah, so as I talked a little bit about before, we recently consummated a deal with this Australian company, which is, I'd say, the most topical of the joint venture partners currently, given that it's a new partner that we brought in. As I said, very excited to work with the group. George Bach, who runs Valor Resources out of Perth. He's, as I said, he's a very successful mining executive down there, and he's partnered up with a geologist out of Saskatoon, Gary Billingsley. Spoke with Gary just this morning, actually, and they're excited to get to work at our North Falcon Point project. This is a property that we had plans to go and do a fairly extensive exploration programs at back in 2015, 2016, prior to acquiring Moore Lake. So this is a project that we have in our portfolio that we very, very much want to see exploration carried out on. There's a high-grade surface showing of 68% U3O8. That is a bit of an enigma. It's one of these, question marks. We're not really sure how it got there, where it came from, but it came from somewhere. And, if you can find the source of that mineralization at depth, that's probably a major discovery. So they've got the team, and they've got the financing to go and to explore it and to advance it. And as I mentioned, it's an earn-in option, so they can earn up to 80%. We would retain a minority interest upon completion of that. And in order to do that, they have to spend $3.5 million in exploration over a 3-year period, pay us just under $500,000 in cash payments over 3 years, and they're issuing over 233 million shares of Valor, which is, needless to say, a big chunk of the company. Will become one of the largest shareholders. At the previous close of Valor, that's about 1.8 million Canadian or Australian, and it's great for us because it allows us to participate in the upside. They have success with the exploration. If they go in there and they test some of these higher priority targets and they're able to make a new discovery, as one of their largest shareholders, will be able to benefit from that. So that's the most recent. And then, as I would have talked about a year ago, we have 2 other partner companies that have been actively exploring our projects over on the west side of the Athabasca Basin. Our Preston and East Preston projects which are proximal to NextGen and to fission, and kind of right in the thick of things over where some of the more recent discoveries have been made on the western flank of the basin. Orano, which is a strategic partner and much larger company, they can earn up to 70% at our Preston project by spending a total of $8 million over a 6-year period. And then our other partner, Azincourt, similar structure whereby they can earn up to 70% of our East Preston project by spending what's going to work out to about $5.5 million. The bulk of that $3.5 million is in, or $2.5 million was in exploration expenditures, $1 million in cash payments, and then there was fairly large share issuance as well. Now they're near completion of that earn-in. They have to make a small cash payment. They've completed the expenditure requirement, so we will likely form a joint venture partnership with them going forward. And they do have plans to explore, continue the exploration at East Preston. Just last week announced the plans for a 2,000 to 2,500 meter drill program. What's great about that project is they've only drilled 12 holes since taking on the option. So it's a project that's got a lot of exploration and geological potential that's been relatively lightly tested. They've done some really good work in the field, and I think with this upcoming drill program, they could be on the verge of finding something much more exciting and larger. And so we're happy to have them as a partner, and looking forward to the news flow that'll be generated from that program.
And lots of different odds and ends you guys have going with your other projects out there, besides obviously the flagship Moore Lake. Yeah, interesting deal there with the Australian company. You know, we always try to advocate to the audience that, you know, you're missing out a little bit on this market and the natural resource market. You have to be involved in both Perth and also Vancouver. Mm-hmm. And to sit out the uranium bull without having any ASX listed stock exposure, I have to say you're doing yourself a bit of a disservice. And
yeah, sorry, I was just going to mention that was something I wanted to bring up, but you know, you're absolutely right. And if you look at, you know, there has been relative outperformance for the ASX mining companies versus their counterparts here in North America, right? And I think part of that is they haven't had to compete against some of these other sectors that have caught, you know, investor interest in Canada and the US over the last several years. And you can see that too, just on the, you know, on the day-to-day trading, where, you know, the ASX mining companies, you know, they can have these big moves. And that was another, you know, component to this new transaction, this new option agreement for Skyharbour. Is, you know, not only is it great for, you know, both companies advancing the project, making sure that you know, we have, again, this, you know, part of having multiple irons in the fire, news flow generation, but, you know, I think it's going to open up a new audience, and you know, you don't have a lot of, there are Australian uranium mining companies, but you don't have I don't think really any ASX listed companies with an Athabasca Basin focus. So it's going to bring, I think, a whole new audience up to the basin for, you know, Athabasca companies and Athabasca exploration co's. And so that's, you know, that's another part of it where I think it could open the door for renewed or new investor interest going forward.
Yeah, and look, people, you know, often laugh at Australia listed stocks for the penny dreadful type share structures they have. And just looking at Valor Resources here, and while it might be a classic penny dreadful, you know, look, we love some ASX listed uranium stocks, but a tenth of a penny to you know, 8/10.
Yeah,
you know,
yeah, exactly.
So
it's a pretty good return.
Yeah, no, look, some of the penny dreadfuls, they won't be penny dreadfuls, I can tell you, when this is over. Good point about the ASX and the mining companies out of Perth. If it ain't Canadian based, probably Australian based, and the US is pretty much non-existent in the mining sector. So you know, you have your two choices when it comes to certain companies. So, well, let's move on. Let's talk the South Bay project, Jordan. You know, copper, zinc, silver, if I'm not mistaken. Given this project is a non-core asset, obviously, to the Skyharbour uranium focus, What's your plan to maybe monetize this project, either by selling it outright or doing some type of a joint venture deal?
Yeah, so it's a non-core asset, and I want to be crystal clear on this. We are a pure play uranium company, but it's something in the portfolio, a legacy asset. It was a past producing mine, actually. It's a great little asset. We are currently talking with a few different companies active in Ontario that are looking at it, and it's a project that I hope this year I would like to think we can get a good deal done on it, especially with the base metal prices starting to move, precious metal prices starting to move a little bit. I think we can, we've kind of had it sitting in the portfolio because the previous discussions we haven't really amounted to anything of any meaningful value. So I think that with the improving metals markets in general, we'll be able to get something significant for it.
And on to the Moore Lake project here. You kind of just overviewed your plan generally for 2021, and maybe you could just reiterate that. But what else is being done at Moore Lake really to prove up the existence of a continuous deposit at Maverick? And do you see that this project will ultimately potentially become a series of smaller discoveries and deposits within a mineable economic radius within the project area? Or do you see that there's really potential to continue to expand the deposit at Maverick?
Well, I mean, look, there's, I think we covered this off at length in the previous interview, but for the audience that doesn't know much about Moore Lake as our flagship project, it's, as I said, it's the focus for us, and there was a historical discovery made there back in the early 2000s, actually by my geological team led by Rick Kazmersky. So they know the project the best, and then it wound up in the hands of Denison when they acquired Rick's company JNR when they bought it out in 2012, and then we did cut the deal with them in 2016 to effectively reacquire it with some new thinking in how we go in and we'd expand the known high grade that's there. There was the discovery hole, or the main discovery hole was a 4% over 10-meter intercept, and right at the unconformity. So most of the historical mineralization that had been found was right. It was either in the sandstone or right at the unconformity, which is interesting in and itself, because that does open up the potential for there to be some of these new mining methods that are being proposed, like ISR at Wheeler, Sabre, which is a joint venture partnership and method that's being developed by two partners of ours, Orano and Denison. It's something that we are paying attention to, that we're looking at, given that what we have currently there are these high grade pods or lenses along this 4.5 kilometer long conductive corridor that straddle the unconformity. But to answer your question, and I think the bigger talking point here, at least in the immediate future for us and for shareholders, is what's the discovery potential? What more can you prove up? And just in the last couple of years, in the last few drill programs, we've really honed in on basement hosted targets. And that's what's really exciting about this project currently and going forward, is we believe that there is a much larger deposit or zones of mineralization at depth in the basement rock, in the feeder zones. We really didn't have, up until 4 or 5 years ago, the ability to properly target these deeper zones. We've had some new geophysical techniques and just a better understanding of the geology, the geochemistry, that's allowed us to more effectively target these basement hosted zones. And so if you look at just even our last few news releases with the last drill program, we announced a 17.5 meter zone of 0.72% U3O8. Within that 10 meters of 1%, that's all basement hosted. That's the longest. The 17.5 meters is the longest continuous zone mineralization that's been reported on the project to date. So we are now seeing these longer zones of mineralization, and what we're planning to do, what we're looking to do with upcoming drill programs, is follow up on that and hopefully tap into something a higher grade and bigger at depth. But again, it's not to discredit what's already there, and certainly our exploration strategy early on with the project was finding additional or expanding on these high grade pods or lenses basically at the unconformity. There's 4.5 kilometers of strike of corridor Only about 2.5 kilometers of that has been systematically drill tested. There's still room to move even within that 2.5 kilometers, and it's open along strike. And as I pointed out, with these new basement hosted targets, it's wide open at depth. So there's very robust discovery potential still remaining at Moore. I mean, again, we have a big portfolio of projects. The fact that we focus pretty much all of our time, effort, and money specifically on Moore Lake over the last few years, shows that this is where we believe we have we're closest to making the next big high grade discovery in the basin. And again, as we've seen with previous success stories like NextGen or Fission, or more recently ISO Energy, one drill hole can completely change the fate of the company in a very short period of time. And so we're excited to get back to work there. Again, look out for news flow on that over the coming months. And it's a good the prospect generator part of the business, partner companies at these other projects, is a great complement to what we're doing at our flagship project.
And Jordan, talk about the location in terms of the proximity to Denison's Wheeler River. When Denison, and I say when, not if, builds out Phoenix, do you see that if a notable deposit is established at Moore Lake, that Moore will substantially benefit from Denison's work nearby?
Yeah, I mean, look, the proximity, we're about 15 kilometers east of Wheeler. The haulage road that goes up to MacArthur River straddles our it goes right in between our two projects. So we're proximal to infrastructure. You've got the Key Lake Mill just to the southwest, and obviously as one of our larger shareholders and a strategic partner of ours, we're watching closely. What they're doing at Wheeler and at the Phoenix deposit, I think is transformative for the basin. The ISR mining method will open up a lot of previously completely written off deposits, I think, in the basin. And so it's exciting to see what's coming out of there. And they've, Dave and the team have done a fantastic job over the last several years since announcing that back in 2018 of de-risking it and advancing the project.
What are your expectations or management's expectations for what you guys see as something that is attractive for suitor companies in the future? So let's call it a mid-late stage bull market. But what do you see in terms of discovery size and economic profile that would really attract a potential suitor?
Yeah, I mean, look, you do need to have some critical mass with the deposit, right? And so that's something we're striving to do. We needless to say believe that the pounds are in the ground, and we just have to go out there and find them at Moore Lake. The other projects and the partner funded projects, look, they all have the potential for major discoveries, right? The geology's right, and we in almost all of our projects, they've all been to various extents drilled, and they've got mineralization, they have showings, there's all the right ingredients there. But as with exploration, mineral exploration, and the discovery process in the basin, it can take time. But ultimately, yeah, look, we want to find the next major deposit, or not to again, getting back to what we currently have at our flagship. Having these smaller, higher grade lenses, they if you have enough of those, they do add up, right? So we're looking at all of that, and we're prioritizing, as far as our drilling's concerned, our highest priority targets where we think we can get the most bang for our buck. Every dollar we raise, we want to make sure we're generating a return on it. And one of the things that we have done quite well over the last several years in particular is using some new techniques, new exploration methodologies to refine targets and to garner new targets. In particular, at Moore Lake, we've had success flying drone geophysical surveys that's helped with identifying and refining targets in the basement rocks. And these are all low-cost methods, less capital-intensive methods to making additional discoveries and expanding known zones of mineralization.
Jordan, as you know, there's a large concentration of aspiring uranium explorers in the basin region, and in fact, quite a huge amount as compared to all other uranium jurisdictions around the world. And I really think to some degree it'd be silly of an investor to just buy them all on a hope of discovery and advancement. My question is, how will Skyharbour, how have they and how will they going forward differentiate themselves from all of the other peers in the basin?
Yeah, it's a great question, and just to back up a little bit on that, yes, there are some new companies that have come into the basin. We just spent some time talking about it. Our new partner company, and there's a few others, but it's still a relatively small universe, and there's a reason that there aren't many explorcos outside of the basin. It's because one, the commodity, the price. It really isn't conducive to greenfields exploration in most other jurisdictions that don't have this kind of high grade potential, right? So really, it's just the explorcos, uranium explorcos are pretty much just concentrated for the most part in the basin, and that's the more or less the investable universe of exploration companies. As far as how we differentiate our story and our company from our peers, one, I talked about this a little bit earlier, but I'd say the relative value, and I still think it's a very attractive entry point given our valuation and given our asset base. I will note the two projects, our flagship Moore Lake and Falcon Point, which we've now optioned the upper half, or the northern third of it, to Valor. We still have the bottom, or the southern 2/3 of it, which hosts an NI 43-101 uranium resource. We're one of the few sub 50 million market cap junior companies that actually has the NI 43-101 compliant uranium deposit. Those two projects were in a company back in the last uranium boom in 2006, 2007 that at one point had a valuation north of $250 million, right? So there, this just shows the kind of re-rating potential as we get into a much better uranium market with the current asset base that we have, not to mention the other assets, other projects that we have. The other big talking point too, as I just highlighted some of the recent drill results. Look, there's companies exploring and drilling. There's not a lot of smaller cap exploration companies that are actually generating significant drill results, or announcing significant drill results. We'd obviously, we feel like there's more to be found at the Maverick corridor. We think that there's going to be the potential for much higher grade mineralization for us to discover. But these are still pretty significant intercepts that we've been announcing over the last several years, and we're adding pounds with each new drill hole and each new zone that we discover. And then I'd say we have, as I talked about, we have this prospect generator, this dual strategy. First and foremost, a discovery company, exploration company focused at our flagship, but we have this secondary strategy of prospect generation, which, as I pointed out earlier, we talked at length about the benefits of that. There's, not many other peer companies doing that. And then last but not least, and I think this is, I'd say something that we've seen over the last 5 or 6 years, where we've remained focused on uranium. We are a pure play uranium exploration and early stage development company. And we talked a little bit about South Bay, but that's something that we're looking to sell or option out. And so, you get direct exposure to uranium as an investor in Skyharbour.
I think those are all fine points. I had that question ties in with this next question, so I guess you get a dual opportunity here. But potential investors who are listening, what would you say to them at this stage at current price levels, market cap sitting at 26 million Canadian? Why should they look at Skyharbour now, Jordan, and what will you be doing in the near term to drive value on behalf of the shareholders? And just would couple that with probably where it is today is a bit of a rounding error as to where we see that most of the equities in this sector are headed.
Yeah, I mean, I think you can break that into two components. One is I firmly believe that we are again very much in the early days of I think a significant uranium bull market, which is going to it's going to be a rising tide, and you're going to see a re-rating of, all of the companies. And, again, I want to point out, and really hammer this point home. There aren't many companies. There are not many ways to get direct investment exposure to uranium. So you don't have to necessarily be a great stock picker in this sector right now, because there aren't that many companies, and there's been a consolidation of good assets and good people into the few companies that have stuck it out. Now we are starting to see new companies come in, which is great for our prospect generator business. But bottom line is it's not a crowded space, and as we see capital, especially generalist money, flow into it, you're going to see, I think, a pretty rapid move in, not just Skyharbour share price, but in all of our peers as well. And the second part to that is we have a lot going on this year at the projects, at our Moore Lake project, with the drilling coming up and planned for this year. We feel we've made great progress there, especially with these new basement targets. We feel like we've just scratched the surface to something much larger. And then partner funded projects and programs that'll be carried out here over the next several months. We've got drilling at East Preston with Azincourt. We've got the initiation of work at North Falcon Point with Valor, and look out for additional announcements on new partner companies as well. Outside of South Bay, we have a handful of other 100% owned uranium projects that we're in active negotiations with potential partners on. So keep an eye out for that as well.
And Jordan, for the audience listening to this discussion, what's the best way for them to reach out to you and the company?
I'm always available. You can visit our website at skyharbourltd.com. All of our contact info is on the website. You can take a look. We've got all of the pertinent information up on the website. We're active on social media with updates. You can follow us on the various social media platforms. So yeah, anyone that has any additional questions, wants to reach out to me, I'm happy to field any questions.
Well, Jordan, appreciate the chat. Thanks for coming back on to update with Skyharbour, and best of luck out there.
Thank you, Andrew. It was a pleasure.